Markets. Ajay, great to have you with us here on the program. It's always a pleasure. Your views near to medium-term markets, we are practically at new highs, all-time highs. So very close to reclaiming those. But what after, in your opinion, Ajay?
Prashant, my sincere advice to everybody would be, markets are good high. This is a good time to take money off the table and go spend it on yourself. Investing in this market at these prices, valuations, you could be in for a big disappointment compared to many other sectors you want to invest. So if you want to invest, perhaps, I would not recommend equity. Strange coming from me, at this point of time, equity investment. Look at a 12-month horizon. You will never make returns to beat the debt returns at this point of time. You'll never make it. So you have two choices. Either you invest now and repent later, sell now, spend it on yourself and feel happy, or put in debt and you'll be a much happier person.
Spend it on yourself. I picked that option. Investments can continue through your life, right? I mean, Christmas doesn't come. It comes only once a year.
Absolutely. I don't know why this Indian thing of saving money. They just need to spend. We as a country need to spend more money. Can't you see people are not spending money anymore?
Ajay, I just look at one article on how many weddings there are in the next 5 months and how people are spending, and you'll change your view on Indians not spending. I mean, the amount of weddings and the spending in the last, it hasn't happened, I think, in the last 3 years. And that also brings up another point about consumption, right?
Yeah, as I said, there's a 5% of India, which you see actually, you only see 5% of India. That's a good part. And I think it's a good relevant India for you to see. That's booming. Absolutely. They're consuming, they're spending in the higher end of the income bracket. There's no, Sonia, there is no problem on that end. The top 5% have no problem at all. I think it's the bottom 70, 80%, which has got a serious problem. And that's why there could be possibly a dichotomy between how the economy does and how the stock market does. You can say it's irrational, it's boom, whatever it is. But that's what it is. Reality is that the 5% or 10% of India that you spoke about, the marriages, the extravagant marriages we see in Delhi and all over the country, absolutely correct. They are spending money. But 85% of India is not able to spend money. And now, how long can the dichotomy continue? It can continue for years to come. But markets have shown, if you look at last 1 year, you would not have made any money in the market if you stayed for 1 year and a long term. Your index is 1% or thereabout. Your banking index is about 9% or thereabouts. The best one is, of course, PSU Bank Index, which very few invest in at this point of time. Pharma is down, IT is down. So, so if you look at point-to-point comparisons, market does reflect Indian reality of slowing consumption and the slowing economy at this point of time. It has not given returns over the 1 year period. We can well say US did worse, which it's supposed to do worse. But they elected a government which was ridiculous government, and they still continue with it. House at least has gone. But if they don't change the political dynamics, they can drag the world down. And we have seen that. We can say we are an outlier, we are sitting in an outpost, but the fact remains we will be linked to America. If America does not change its president's next 2 years, your returns are going to be very mediocre. Americans have got a shellacking on 401k case, which is a savings account. You will not perform better than Americans. If Americans don't pull their act, it's very difficult for any equity market to perform.
Sorry, just to come back on that point that you began with, Ajay, this is a great time to lock in these yields on fixed instruments, fixed rate instruments. Could you press on that point, explain that?
See, even at the lowest level, which you see, for instance, power grid, etc., the REITs, which are the integrated REITs, they give you 9.3% return at this point of time. Post-tax, they give you something about, part of it comes pre-tax, about 10%. I don't think your index is going to give you 10% if that's what you're looking for in a 1 year period. Your debentures are now at 11.5% or thereabouts that you get it. Even the 6-month treasury bill you can buy on the RBI portal is about 7.5% at this point of time. So, if you look at that perspective, today, locking in debt yields in instrument is a remarkably good idea. Worst case scenario is your EPF and PPF. They give you an 8.1% yield tax-free at this point of time, which corresponds to about 10% return on an absolutely 100% safety basis. Markets cannot do better than that in the time frame that we are in at this point of time. Let me assure you, the next 1 year, we've already seen the result this quarter, not the most flattering results. Let's see how exports go on for the next 1 month or so. Is it 1 month seasonality? And therefore, what you see is slowing consumption. Indian economy is going to grow at 4%. If economy grows at 4%, nowhere market will grow at 12%.
Hi, Ajay. Morning. Let's talk about a couple of other stocks, that we have spoken about in the past. I recall a couple of months ago, you joined us. You were saying Infi, I think, is providing a good entry point. And tech actually has done pretty well, in the last 2 months. So what's the view on the tech space? Do you believe that bulk of the pain is in the price? Or given that we're expected to see a slowdown, well, there could be plenty of pain in store.
I don't, sure, there can be pain, but I think this is one sector when it goes to historical lows, 52-week lows, it's a must buy because you'll get good returns out of this sector. Unlike any other, you can have a demand compression for a quarter or so, but you can't change the dynamics. You can't create an Infosys. You can't create TCS in the world. Between Accenture, TCS, and 4 Indian companies, they divide literally the world of software. You can't make a company like this. You can certainly create a new cement company. You can certainly create a new EV company. You see what happened in EV space? They massacred the existing players. Bajaj Autos and the Hero Honda, they're nowhere in the space. Suddenly people from outside come in. But people from outside cannot come in the software space. These companies will rule the roost. The trick is, do not buy on the highs because you repent it. Like in the market, you repent buying the highs. Wait patiently. There is no hurry. You will get chances. You got chance 1 month back in IT. Even today, it's a good price. I would say most IT stocks. You'll get good dividends, reinvest them back if the price is lower, but be consistent with IT. IT is not about buying for 3 months. IT is about buying for 3 to 5 years. And I promise you will give a much better return. IT is one of the best return sectors if you look at Indian for a 5-year perspective, almost 22-25% return, inclusive of dividends. No other sector in India has given a 5-year return of 25% consistent in India. So I would still say next 5 years, bet on IT, you will get again the same returns.
Okay, and what about ITC? That big boy surprised everyone. You were bullish on it the last time we chatted. Running out of smoke or there's plenty of steam in store?
Well, it all depends upon people like you. Keep goading him. Keep goading him, and it's going to result. It's like the reluctant bullock, which moves suddenly, then you get a return, then it stops again. Now you channels can put some little more pressure saying, guys, where is this segregation of hotel business? Where is segregation of tech business? Come on, put some pressure, guys, and investors will rebel. I think it's an amazing case of phenomenal value going waste, if you ask me. And I think we just need to be pressurized to do something. I want to go into the brain of the CEO of ITC and say, what part of this you don't understand, man? Just listen to some of the people. Sonia, you have been a cheerleader for ITC. You can follow the suit and tell him, listen, guys, just do it now and put us out of our agony before we retire.
If we had that kind of power, I assure you we wouldn't be sitting here.
We're putting pressure. Ajay, I assure you we're putting pressure, but hopefully he listens to that. And I got a little nervous when you said it's on people like you. I was like, I'm not a non-smoker most of the time. So I was like, Bob's watching, what's going on?
No, but I mean, I take your point, right? ITC was like a big meme fest, and then look at the way the stock has zoomed. Where else, Ajay? Where do you see the next move coming from? If you perhaps had owned names like ITC and M&M, you would have been, perhaps flying to the Bahamas this year. What will make you do that next year?
I think, my view, we continue to be very strong on the mining sector. In the correction, we picked up a lot more stock, and it's done reasonably well at this point of time. I think mining will remain a good stellar for India perspective. It's done pretty okay in this year, not so bad compared to with dividends and capital gain put together. You got a yield of about 18%, which is okay. I think mining will continue to be. Power sector, I think, should give phenomenally better returns as India realizes that you need to pay for power, both broadly speaking, at the end of the day. So I think between this and power sector, some of the capital goods companies, which are the good ones, these are execution companies. Like things like, I'm not saying recommending a name, just giving example. Things like CG Power, they have done phenomenally well at this point of time. I think the execution companies in the capital goods sector, they would do, I think, well. You could have a very beautiful case of a L&T restructuring. They're already doing some mergers, etc., etc. Now, if they split the company, this company is worth 3 times what it is today. If they just get rid of their finance company for awful reasons, what reason they kept it, I do not know. Learn from GE. It can take you down, buddy. Take finance out. L&T is a brilliant company with a phenomenal valuation. So I think if this restructuring story plays out, you've seen UPL, agrochemical story, and now we got holding in that. So it's not recommending, but I'm saying it. Look at the restructuring story playing out. On a global level, they're restructuring. So I think there are sectors, restructuring stories, which are coming into play in India, which has given very good returns in the past, will continue to give returns. So I think players like L&T, players like UPL, etc., which are restructuring the basic operation, very good. Government defense, you can invest, and they have done phenomenally well. We have been saying that. but invest with the peril that they can be the same way, they can go the same way as an IOC or BPCL. It's a government diktat to say you make 7.5%, 12% return. Tomorrow they say they make too much money. Let's increase the defense expenditure, reduce the profits of Bharat Dynamics or Bharat Electronics, etc. Well, you can do nothing about it. So I think it's a high risk, but a reasonable venture to be if you want to put your money.
Okay. I mean, and we have the management of Mazgaon Dock joining us a little later, Ajay, so you might want to hear in. Just one last point. All these Nykas and Paytms and policy bazaars of the world, as Zomato, for example, anything coming to delivery, another one, anything looking interesting to you?
Interesting to sell if you have. Prashant, they have made the biggest fool of investors. The employees and PE funds have made the biggest fool of investors in the history of investing. You know, they give a concept called adjusted EBITDA. They give a concept saying, you know, ESOP, which we sell in the market, we get for 10 and such. That's not a cost. You know what? That's not a cost. Ignore it. Ignore it. I think they are the biggest. I think it's a tulip mania in a different world altogether. They don't make any money, they lose money, and they still got value. They sell for 200 crores, they make a 200 crore loss. Does it need to be a genius to do that kind of stuff? Man, I tell you, I can find 100 other people who can sell for 200 and make a loss for 200. Ask the airlines, they do it very well, actually. So, I would say just stay away for the time being. These are overhyped, overvalued. They still haven't gone down to Earth. And Earth is still far from them. They're still not there close to it.
Not mincing your words, Ajay, this morning. Thanks so much for stopping by.
Thank you very much.
On a whole host of sectors, giving us your view on the markets.